Okay, let's say that you have an equity of $1,000, okay, and you want to invest only $100, sorry. Okay, here it is. Now, normally use diversification, and you know that the opportunities can come in different markets, so you want to divide those $1,000, the total of $1,000 in 3 different markets. Now let's say it is euro, let's do it like this, USD, okay, then it is sterling USD, okay, and the other one is let's say euro yen. Okay, so when you consider the ATR, so you see the ATR, let's say that Euro USD has an ATR of 4, the pound has an ATR of 8, and the Euro yen has an ATR of 6. So that means that the less risky one is Euro dollar, then the other one is Euro yen, and the most risky is the GBP USD. According to this calculation, so to this setting, sorry, to the ATR, you will divide the €100. Now we're gonna get a little bit in math right now in order to understand how to divide it. So you have €100 to invest, $100. Sorry, I'm used by euro, but I'm used with euro, but this is why the euro comes often. We have 4, we have 8, and you will have 6. Now we know that there is a sum called x that when divided by 4 plus the same sum when divided by 8 as the ATR plus the same sum x when divided by 6, okay, summing all of this, it will give us $100. It is quite simple to say. So you check the ATR, like in this case 486, okay, for the 3 markets, or if there are 4 markets, then you will add it to the next x. If you have, for example, another Zeta market that has an ATR of 10, then you'll add here x below plus x below 10, okay, plus x divided to 10, equal to €100 or to the sum that you want to invest. In this case, what we do is to make this equation here to find out what is the x. So let's go and make some poor math. Erase all. We said x on 4 plus x on 8 plus x on 6 equal to 100. Okay, that means that we have to make an equal divider in order to sum this. So we have here like 486, it would be the maximal common divisor is 48. Okay, so we have 48 that is divisible for each one of these numbers here. So we have 12x on 48. Now I'm not going to explain math how it works, but you set the divider equal for everyone. So in this case, for the divider to be 48, the x will be 12. You have to multiply it by 12 plus 6x on 48 plus 8x on 48 equal to 100. Okay, we have this one, so we make 12x plus 6, sorry, x plus 8x all on 28 equal to 100. Then we set the 48 in this case, and we have 12 and 6, 24, 32x equal to, no, sorry, it's not 32, it's 18, 26. I have to correct this. 26x equal to 4,800. Then the x will be this one, 4,800 divided to 26. And let's make this calculation. Divided to 26, it is equal, let's say x equal to 184.61. 184.61. Now let's turn back to the previous equation where we said x divided to 4, x divided to 8, and x divided to 6. Okay, we're gonna find the different x's right here. So the first equation is 884.61 divided to 4. So we can make, here we have it, divided to 4. It gives us 46.15. 46.15. Okay, then we're gonna make divided for 10, so we turn back to the 884 just by multiplying by 4 as we divided before. Okay, we have it, and we get back to, you can simply write 184.61 divided per 10. I just want to make it simple right now. Divided for 8, it gives us 23.07, 23.07, and the last one, x divided to 6, so per 8, okay, divided to 6, 30.76, 30.76, no, sorry, 6. Okay, now we have 46 plus 23 plus 30 is almost 100, but if you keep the fractions of 0.15 and 0.67 here, you're gonna get like something like 47 plus 23 plus 30. It is almost $100. Okay, so when you open the trade, you're gonna set 46, so 0.46 lots. If you have if you have a leverage of 100, okay, because if you have a different leverage, then you're gonna make other calculations here. On euro dollar USD, okay, then a 0.23 on GBP USD, okay, and a 0.3, okay, on Euro JPY. You can understand it. Okay, so these are the sizes of lots you're gonna use on your trades, okay, in order to make exact entries for every pair by using the same risk. Now I know that maybe sometimes the ATR can change on different markets, so this is why you have to measure it different times in different places. You have to see, to go back on the chart and see in different places, in different dates, if the ATR respects far or less the same portion ratio, the same ratio that it has right here. So for example, when you make a search about the ATR, just erase here, let's talk for example first day, a day X that you choose on the market, you see Euro Yen, GBP, and sorry, Euro USD, GBP USD, and Euro Yen. You see, for example, in the first date, 1, 2, 3. Okay, the first date you see like 486, as we said. Then you see, for example, 597. Then you see 3, 6, 4, something like that. Then you see that the ratio between these ATRs is almost the same, so it is just like the first one. Okay, you just try to find out how much pips has the ATR more than GBP, than the Euro USD, or Euro Yen more than Euro USD. In this case, you know that for example, through Euro USD and GBP USD, it is for example a 1:2 ratio. Okay, and things like that, just to have some numbers more concrete. But anyway, you give weight much more to the last ATR that you can see on the market, so to the actual one, 486 for example. Okay, just to be sure, you can check other days to see if the ratio between them is in this setting, these parameters, in these ratios. Okay, Then I told you something. I just want to explain it also. When I said that if you have 100 leverage, okay, and $100 to trade, then you make that math calculation. You can turn back the video and see it. And you set 0.6046 on Euro USD and 0.23 on GBP USD and 0.30 was on Euro Yen. Okay, I said if you have the leverage of 100. Why the leverage of 100? Because you have to know that these measures here, okay, this is a $46 investment only if you have leverage 100. If you have a higher leverage, for example, let's say lev is 200, okay, a 0.46 will be a $23 of investment, because 23, okay, multiplied per 200, it gives you $4,600 of investments. That converted to lots is 0.46. Okay, if you have it higher, it is even lower. But if you have 100 leverage, then it is 0.2046 per 100 is 4,600. That in lots means 0.46 lots. Okay, I think it's totally clear right now, this kind of part. And what we have to see is, yeah, you have to only to know that usually you have to see to consider the ATR. The ATR is a setting to see when you trade, because you know that the volatility in different markets change. So as it changes, the risk, if the volatility is higher, then the risk must be lower. The size of your trade must be lower. If the volatility is lower, then you can rise up the risk in order to stay at the same range. Okay, and don't ever go over your $100 or whatever it is. How to calculate? I'm going to include also that how to calculate the 100. Okay, you have to consider something very interesting when you trade on markets. Okay, your equity must be like a coverage for your trades. Okay, you cannot have $1,000 of trade and trade all 1,000 with leverage. So per leverage, that must be 100, for example, in our example. Okay, it would be 10k. Okay, you cannot trade in this way. I know that if you gain, then you gain a lot of money, you double your account in a second. But if you are right, you gain a lot. If you are wrong, you lose all. So you cannot do an all-in thing. We cover it on our money management courses. So you can open an account and talk with us about that, but you cannot trade in this way. All you have to do is, if you have $1,000 of account, okay, and want to open some trades, you have to consider that having 100 leverage, 100 times leverage, okay, every trade you open, it will be multiplied by 100. So as you earn and lose according to these settings here, the 1,000 has to cover the losses. Now you know that the market goes up and down, and it's not going always in profit or directly in profit or directly in loss. It will make win, loss, win, loss, win, loss, win, loss, till it gets in the right point where you close it. Okay, so when you open a trade of let's say 0.5, okay, and it loses, before to win, it loses 50 pips, it will be a quite of $25 of background, Skype, controlla la tua impostazione, okay, of dollars. Now imagine if you open sync anyway, just let me change it. It says that it does not has any other battery. The battery is going out, so we have to charge it. Sorry for this movement. Here is the charger. Okay. If you open a 0.05 and the market makes 50 pips, okay, then you gain or lose $25. If you open a 0.50, it would be 250. If you open a one lot, okay, it would be 500 euros of gain or loss. Okay, so gain if you are right or loss if you are wrong. But consider that if you have $1,000 of capital and you make just 2 loss by trading 1 lot per time, what happens? You lose everything. The 1,000 is not anymore. This is why you have to consider, okay, a small part of your capital to insert it on trades. Only a small part. And while trading on Forex, we suggest you not to use more than the 10% of your equity. It would be better if you use only 5% of your equity. Okay, so in $1,000 you used only 50. The maximum is 10, not more, because the maximum of 10 gives you a protection of 5% of movement for the market. So if the market moves up to 5%, then it can in loss that it can take all the equity you have. As 5% is a large number for one day movement, but it's not too much. Okay, it's better to stay at 5% of investment, so it will be about a 20% of coverage, or 10% of coverage, sorry. So the market has to move about 10% in order to make you lose all the money. As a 10% movement on the Forex market, on the major Forex market, it's not a common thing. Okay, it's not usual. It's hard to see a 10% movement. Then with a 10% you have a risk profile, a low risk profile, so you can consider it. Okay, so that means that when you trade, cancel. Okay, you have $1,000. You trade only 5%, so it is $50. If you open a trade in a leverage of 100, let's say a leverage, okay, so $50 will be a 0.05 investment, the maximum one. So with all the trades you open a 0.02, 0.02 and 0.01. okay. If you have a larger capital, for example, let's say 10k, then you can trade $500 per time. So you can open like okay, I'll have to go now. I'm just finishing. Let me close a little bit this. Okay. 10th, you can open a 0.2, 0.2, 0.1. So in total is 0.5, like you see right here. Okay. It's totally easy to understand. So the total of your open trades must be the 5% of your equity. This is everything you want to hear. Now, as I said, we have one-to-one courses to explain all this stuff. Okay, so you have just to open an account with us, and you will get all this information to in a one-to-one course. I'm closing right now. Have a nice day, and subscribe to our channel.